Okay, think about this. Amidst all the churn in today's financial markets, what if one big asset manager wasn't just surviving, but actually showing like really remarkable growth?
Right, and not just growth in the numbers, but growth in how they reach people, how they serve investors.
Exactly. And that's what we're going to unpack today. This deep dive is all about Aditya Birla Sun Life AMC Limited. We're looking at their pretty impressive Q1 FY26 results.
And the strategy behind those results. What moves are they making?
Yeah. So we've gone through their official investor presentation, the press release they put out on the financials, and also the document from their board meeting.
Our job basically is to pull out the key takeaways, the insights, and give you a shortcut to understanding what's really going on under the hood with these reports.
Okay, so let's just jump right in. Unpacking Q1 FY26. The big picture, financially speaking, what stands out?
Well, the headline numbers are strong, really strong. You're seeing solid double-digit growth pretty much across the key metrics year on year.
Like the revenue from operations, that was R's 4.5 billion, up 16% compared to last year.
Right, and what's maybe even more telling is how that translates down the line. Operating profit jumped 21%.
Profit before tax, PBT, that surged 22%.
And even profit after tax, PAT, was up a healthy 18%.
So it's consistent growth.
Exactly. What's fascinating here isn't just, one good number. It's the consistency. It really suggests a robust operational foundation. It feels well managed, sustainable.
Makes sense. And that strong performance naturally leads us to look at their assets under management, right? The AUM.
Yeah, the total amount of money they're managing, that's also way up.
Their overall quarterly average AUM, the QA AUM, which kind of smooths things out, grew 21% year on year. That's over ours. 4,433 billion now.
A huge number. And the mutual fund specific part of that, the MFQAUM, that grew 14% to ours, 4,035 billion.
Okay, but let's break that AUM down a bit because the composition tells a story, doesn't it?
It absolutely does. Where is the money coming from? Where is it going?
Right. So equity mutual fund QAAUM, for instance, that rose 11% to ours, 1,802 billion, and it makes up what, almost 45% of their total mutual fund mix, 44.7%.
Yeah, a significant chunk in equity. But if we connect this to the bigger picture, look at the individual investor AUM, the monthly average MAAUM.
Okay.
That's up 10% year on year, reaching ours 2,038 billion. That's nearly half their mutual fund AUM coming from individual investors.
And what about the geographical spread, the B30 cities?
That's another key piece. The AUM from beyond the top 30 cities, B30, that MAUM, increased by 12% year on year. It's now ours 722 billion.
So about 17.4% of their mutual fund assets.
Right. And this highlights something crucial. It's not just about managing more money overall. It's about this deliberate deepening reach into, India's incredibly diverse investor base, small towns, emerging cities.
Getting beyond the metros.
Exactly. And that kind of broad penetration, that's fundamental if you want long-term sustainable growth in a market like India.
Yeah, that makes sense. This isn't just luck. It feels like a very deliberate strategy, focused on building, as they say, scalable business with long-term customer value.
And a big part of that is the focus on SIPs, systematic investment plans.
Right. They're servicing, get this, 10.7 million investor folios now. That's up 14% in a year.
Wow. That's a lot of individual accounts.
It is. And here's where it gets really interesting for me. They're not just attracting lump sums. They seem focused on building these long-term habits. What does this intense focus on SIPs tell us about their strategy?
Well, it screams long-term stability, doesn't it? SIPs generate consistent inflows pretty much regardless of market ups and downs. They call it across market cycles.
Less volatility in their inflows.
Precisely. It helps embed investing as a regular habit for people. It makes their asset base more resilient, more predictable. You're less reliant on big, chunky investments that might dry up when markets get shaky.
And the numbers back that up. Their monthly SIP contribution, including STPs, was Rs 11.40 billion for June 2025.
And they registered nearly 600,000 new SIPs just in the last quarter, about 583,000 actually.
That's building a strong foundation for future inflows.
Definitely. It's a powerful engine for future growth.
Okay, so that long-term view, it seems to connect directly to their expansion efforts, both geographically and through different channels.
Absolutely. They've built this huge pan-India distribution network, over 300 physical locations.
And crucially, over 80% of those are in the B30 cities. They're really walking the talk on reaching beyond the metros.
Yeah, plus you have, over 89,000 mutual fund distributors, MFDs, 330-plus national distributors, banks, digital partners. It's a massive web.
And they're constantly growing it. They onboarded over 2,200 new MFTs just in Q1 FY26.
They even mentioned this lean model for expanding into, quote, deeper markets, over 100 emerging market locations with dedicated staff.
This raises an important question, though. In a country as vast and, well, diverse as India, how critical is this multi-channel approach, especially the push into B30 cities, for actually holding on to or gaining market share?
Oh, it's absolutely critical. You simply can't rely only on the major cities anymore if you want significant growth.
What are some of the maybe unique challenges or opportunities in reaching those deeper markets that Aditya Birla seems to be tackling well? It sounds like they're trying to reach almost every corner.
Well, historically, the challenge was always distribution cost and, frankly, financial literacy in those areas. Reaching them was expensive, and explaining complex products took time.
Right.
But their multi-channel strategy, especially leveraging local MFDs who have that community trust and this lean model, it helps overcome those hurdles. They can cater to regional needs, build relationships face-to-face, or digitally if preferred. That's key for capturing that next wave of investors.
And technology must play a huge role in making that work seamlessly. Their digital platforms.
Yes, they highlighted their digital ecosystem, things like a dedicated partner app, an investor app, an API gateway for integration.
Making it easy to connect.
Exactly. And features like one-click SIP registration using UPI AutoPay eKYC for easy onboarding. They even mentioned AML tools like My Mutual Fund GPT and salary SIP options.
So using tech to lower friction and make investing really user-friendly.
That seems to be the goal. And that kind of forward thinking, it also applies to their product mix. It's not just about traditional funds anymore.
Ah, yes, the diversification part. They mentioned accelerated growth in passive and alternative investments.
Big time. Look at their passive AUM. So ETFs, index funds. That's at RS, $364 billion now. They said that's tripled since June 2022.
Tripled in about 3 years. Wow.
Yeah, and within that, ETF AUM specifically is up sixfold to ours, $86 billion over the same period. Index fund AUM doubled to ours, $240 billion.
Okay, so huge growth in passive. What about the alternative side?
That's also booming. Total alternate AUM hit ours, $398 billion, and this is where it gets really eye-popping. The PMSAI segment. That's portfolio management services and alternative investment funds, typically for wealthier clients.
Right, more sophisticated product.
Their AUM there showed a massive 751% increase comparing Q1 FY26 to Q1 FY25.
751%.
Yeah, a huge surge. They're launching new funds too, like the ABSL India Special Opportunities Fund, Structured Opportunities Fund 2, and India Equity Innovation Fund is apparently in the pipeline.
So what does this all mean? Clearly, this isn't just your standard mutual fund shop anymore, is it?
Not at all. It's about catering to a much wider spectrum of investor needs, risk appetites, market trends. Passive funds offer low-cost diversification. Alternatives tap into different asset classes, potentially higher returns, often for more sophisticated investors.
And potentially higher margins for the company too, right?
Exactly. The explosive growth in PMSA-IF definitely points to a strong push into those premium, higher margin segments of the market. It's diversification and moving up the value chain.
Makes sense. Okay, so they're expanding products, reach, digital capabilities, but they're also investing heavily in people, education.
Yes, that was another strong theme. They emphasize educating both existing investors and, importantly, the next generation of investors and distributors.
Building the pipeline.
Right. They quantified it to reached over 1.2 million people through more than 16,530 training sessions.
That's a huge outreach effort.
It is, and specific programs, too. First Financial Lessons, they partnered with 23 universities, reach over 45,000 students.
Starting early.
Yeah. Their Nivesh Mahakumbh program apparently got over 4.3 million views, and Investors Hangouts program with nearly 180,000 active users, millions of YouTube views.
And they have something called For Her.
Right. Customized workshops specifically targeting women investors and women MFDs. It's a really comprehensive approach to building financial literacy and, crucially, trust.
That kind of deep engagement, the educational outreach.
Yeah.
It feels like a really smart long-term play.
Absolutely. It cultivates a more knowledgeable investor base. They're likely to be more confident, maybe invest more consistently, and potentially become more loyal, sticky clients over time.
Which raises an interesting point. In a market like India, where financial literacy can still be a significant barrier for many, how much of a competitive advantage does this kind of extensive education actually provide?
I think it's massive. Education builds trust, demystifies investing, and positions them as a partner, not just a product seller. In the long run, that trust is invaluable. It differentiates them.
Okay, so that focus on long-term thinking, building trust, educating, it seems to apply not just domestically, but now also globally. Which brings us to the big surprise from their board meeting update.
Ah, yes, the Gift T-City venture. That was definitely a notable development.
Tell us about that. They got approval to set up a wholly owned subsidiary in Gujarat International Finance Tech City, Gift City. The proposed name is Aditya Birla Sun Life, AMC IFSC Limited.
Right, and this is a pretty significant strategic pivot. What's really interesting is how this positions them beyond their traditional home market. Think of Gift City as India's dedicated hub for international finance, a special zone designed to attract global capital and business.
Like an offshore financial center, but onshore?
Kind of, yeah.
Yeah.
It operates under specific IFSC International Financial Services Centers regulations. So this new subsidiary is going to operate as a fund management entity, an FME, under those rules.
And what will it actually do?
Well, the filing says it can act as an investment manager, sponsor, trustee, or advisor for all sorts of pooled investment vehicles. Think venture capital funds, retail schemes aimed at international investors, family investment funds.
Operating out of Gift City.
Operating there, yes, but potentially serving clients or managing assets in other permitted international jurisdictions, too. Plus, they'll offer portfolio management and advisory services on a global scale from there.
So what does this signal, what does this mean for you, the listener, the investor? This isn't just about Q1 results anymore, is it?
Not at all. It's about them anticipating future trends, looking at global opportunities. It positions them right inside this burgeoning international financial hub that India is building.
It shows a really forward-looking mindset.
Definitely. It signals they're ready to explore completely new avenues for growth, possibly attract international investors, and maybe even offer unique global investment opportunities through that Gift City platform eventually. It opens up a whole new strategic dimension.
Okay, so wrapping this up, we've just looked at Aditya Birla Sun Life AMC. We saw really robust financial performance in Q1 FY26.
Yeah, driven by smart strategic moves, expanding into retail, pushing hard into those B30 markets.
A strong commitment to digital to make it all work smoothly.
Plus, really impressive diversification. That growth in passive and especially alternatives is significant.
And then, capping it off, this bold strategic move into Gift City, which clearly signals their global ambitions.
Well, it paints a picture of a company that's not just performing well now, but actively laying the groundwork for sustained growth and relevance, both here in India and potentially on a bigger stage.
So here's something to think about as we close. How is the future of investing being shaped? It's clearly not just about the raw financial returns anymore, right? It's also about access, about education, about global connectivity.
That's a great point. The landscape is definitely shifting.
So what might it mean for your own investment journey when the big asset managers are starting to think beyond national borders, leveraging new hubs like Gift City? What new opportunities or maybe even new ways of thinking about investing might this unlock for you as someone learning about this space? Something to ponder.